Joining me, Michelle Gibley, Director of International Research, and Collin Martin, Director and Fixed Income Strategist. Afternoon, team. Michelle, let's talk a little bit firstly about the overnight data and give me your take here on the kind of starting point for international stocks this week.
Yeah, over the weekend we got China's monthly data. Shows that its economy continues to muddle through. We actually saw a pickup in consumption, but less strength in manufacturing. That's kind of the opposite of what we saw earlier this year. But, consumer confidence is really hindered by the slowdown in the property market. So we're not calling for a big jump in consumer spending. Property prices continue to fall. And so that's really going to restrain spending. But the good news for investors is that Chinese stocks are attractively valued. They're trading near their historical low valuation on a forward PE, just 10 times next 12 months earnings. And it looks like maybe Chinese stocks put in a low earlier this year.
So it seems like that kind of speaks to your point when the stocks are firm despite fairly unimpressive data still. I mean, we wouldn't describe these data as impressive, right? I mean, I guess better than like the worst points of the last year.
Yeah, not amazing data, but stocks have already priced that in.
Yeah, it seems like, again, today, because we rally on it. What about on the euro situation and the fallout from France's political situation, G7 meeting, any of that market moving, Michelle?
Yeah, we're going to see French politics continue to dominate the headlines for the next couple of weeks, probably. But, investors are really missing the economic upturn that's happening under the surface. And, this snap election in France, it really brought back memories of the Eurozone debt crisis. But it's not Eurozone debt crisis 2.0. There are not calls to leave the euro, and banks are better capitalized than a decade ago. And actually, Eurozone economy is doing okay. Its manufacturing sector was a bright spot in May, and we'll get the preliminary June figures later this week that could show that continues. And again here, European stocks are attractively valued. They're below their 10-year average forward PE, and corporate earnings are being revised higher.
Okay. The potential for the euro then to go on some big, strong move seems doubtful, I guess, at this point. Is that fair to say, Michelle, until some of this gets cleared up?
Yeah, and we're likely to see, the threat is that we could see higher fiscal spending in France, and that's why we saw a little bit of an uptick in the bond yields, the government bond yields. But yeah, what typically happens is to get in power or stay in power, we get fiscal spending plans that are a little more prudent. And so we could, though, see market pressure until that happens.
Okay. Collin, let's talk some bonds here. Given some of the rally back today, should we call that chop or should we call it confidence going into retail sales tomorrow?
Well, I think it's probably a little bit of payback from what we saw last week. We saw a pretty sharp decline in Treasury yields last week, given the better than expected inflation data. Today, it was a super light calendar. We saw Empire Manufacturing, which came in better than expected, but not enough to really move the needle like what we saw with the 5 or 6 basis point increase in Treasury yields. That was probably due to one, higher oil prices. We saw break-even rates rise a little bit, so inflation expectations picked up a little bit. We also saw a heavy corporate bond new issue supply, and when that happens, we saw about 20 billion or so. To get buyers in, that can take some of the demand away from Treasuries. So that was likely the key driver of today's move in Treasuries. But we think tomorrow will probably be more impactful from an actual economic data and what should drive yields going forward. We got inflation data behind us. Now we're back to looking at the consumer and really what's driving the economy. So retail sales is super important. We're always looking at the control group. That's really what feeds into GDP, and expectations are for it to come in stronger than April. So I guess the question is, how strong does it come in? And we'll probably see a reaction depending on which way that goes.
Range bound generally. The theme for Treasuries. For credit, though, a little bit of kind of some crunch last week. What are you monitoring there? Is there anything to speak of in terms of spread widening at this point?
Yeah, it's a great point, Oliver. I think the question now is that little blip we saw, are we going to see a continuation there? You kind of need to squint to see some cracks forming. but they are forming. If you look at just month-to-date total returns of credit, whether it's IG or high yield, they're negative on an excess return basis, and it's the first time in a few months we've seen that. And as you alluded to, we saw spreads actually pick up a little bit last week, both investment grade and high yield, still very low in the grand scheme of things, but we are starting to see some cracks. One thing that we've noticed recently, it didn't happen necessarily last week, but we saw a few weeks where IG, investment grade, continued to get a little bit tighter, where high yield wavered a little bit or actually increased. And there you kind of see a bifurcation. And I think that's the risk we're seeing right now. And I think the risk that could lead to spreads moving higher down the road is just the higher for longer theme we're seeing right now. Higher short-term rates impact high yield bonds more than they impact investment grade bonds, because those issuers, one, have a lot more debt outstanding. So an increase in borrowing cost really hits their bottom line, but they also have shorter term maturities. So they need to roll it over. They can't really wait as long as an investment grade issuer might be able to. So if we're still in this high for longer theme, and the longer we're in that, that continues to pose a risk for leveraged issuers.
Great stuff. Great answer from both of you guys. Appreciate it very much. Collin Martin and Michelle Gibley. Nice chat.